Good morning. You're watching The Market right here on ET now with me, Aisha Faridi, Avan Dabash, Nikunj Dalmia in the studios. Let's just quickly tell you what transpired in the markets yesterday because, literally, it was a very, very sideways session. Having said that, this morning, you are seeing the SGX Nifty holding up just about marginally, 0.3%. And yes, you've got a fabulous handover coming in from the global equity markets. And I stand corrected, even as we speak, the SGX is completely flattened out. And that's how sideways and volatile within a narrow band the markets have been. Having said that, the Nifty in the last 7 consecutive days has managed to knock down about 500 points. But the only thing is that, this fall, Nikunj, is not coming in a very ferocious way. It's a very slow, grind down kind of move that the Nifty has seen. And year to date, we've already fallen 4.5% in just 2 months flat.
Yeah, dull market is always a bad market. You cannot trade long, you cannot go short. If you go long, you lose money. If you go short, you lose money. The 3.5% decline in the last 7 days. So what has changed? You could ask yourself that very basic question. Why have markets fallen 3.5% or about 3.6% to be precise in last 7 days? While the fall is not large on terms of a narrative, let's look at it. What has changed in the last 7 days? Inflation. Globally, everybody is talking about inflation. Second, FIIs selling. Third, Adani volatility is back on the table, whether it is Adani Ports or it is Adani Enterprises or a stock like LIC which has fallen. Until the time these stocks will not become stable, disproportionate amount of time and energy goes in really observing them. There is no participation in them, but when you see a screen which has got an ISO like what's happening in Adani group of stocks, it just does not give you a very happy feeling. And then globally the yields are rising. So if I put things in context here, you may use the word slow grind, you may use the word market which is lacking any energy, you may use the word that markets are getting tossed here and there, we are going back to the budget day low, but this is not a market where you can really feel very excited about participating, or you are able to spot a lot of pockets of opportunity. It does not matter for a trader whether markets are up or down, they look for a trend.
Yeah.
A weak market means you want to go short. A strong market means you want to go long. A dull market means that you can't go short, you can't go long. And if you're going long, you're losing money. Going short, you're losing money. So for a trader, it is like a nightmarish market.
Yeah, it's neither this way or that. Having said that, the FIIs selling month to date is in excess of 6,000 odd crore rupees. So yes, while it may be the most boring market in most of the days, but data seems to be suggesting otherwise. FPIs also, they continue to sell into the first fortnight of Feb, and that's pretty much the trend that one has seen. Adani total has been on a lower circuit now for more than 20 days. So the Adani group selling really continues. In fact, we were just charting the last 7-day move on the key indexes. The Nifty has fallen in excess of 3.5%. The Nifty Bank is down 3.25%. Nifty Mid Cap 100 is down 3.25%. And the small cap index as well has lost the maximum, nearly about a 4% fall is what it's seen. The inflation narrative, the FII selling, Adani volatility, rising yields, all of these continue to be the underlying trend for the market negativity at play right now. So yes, while it may be most boring, Nikunj, but it has been grinding lower.
Yeah, it's not a market where you can commit. Traders, they hunt for a direction, they hunt for a momentum, and when momentum is not there on the long side, when momentum is not there on the upside, it's a very annoying feeling. Even at a portfolio level, it's a market where you see, okay, my value of my portfolio is going down. It may not go down in an alarming manner, but it's going down 1% a day, 2% a week, 5% a month, maybe 6 or 7% in last 1 quarter. So it's not a great feeling to see the way how the equity underperformance now is there at a time when we are talking about fixed deposits and fixed income returns which are rather supportive. So it's not it is just sapping you, Aisha, because whatever you are doing, and when I speak to traders, real smart traders, they're saying the only way to not lose money in the market is not to remain active.
Yeah, don't trade at all.
Don't trade at all. So if you're not active, you're actually not losing money. If you're active, long or short doesn't matter. So you are in this market, and I would urge our viewers that there is no need in trying to preempt what's going to happen next year for a trader. Let the market give you a direction. Directionally, if you ask me, the mood point is sour and bears are getting the grip. The markets are falling into the bear grip clearly after the technical setup, what we saw yesterday. But you're not convinced that you want to go short.
Yeah, so wait for perhaps some sort of a decisive trend before you make your next move. But all said and done, making a case then for long-term wealth creation, and the proof really is in the pudding. If we map out the kind of long-term returns we're talking, 5-year, 10-year and 15-year of different asset classes, MCX Gold, the Nifty 50 index and deposit rates, Nikunj, clearly there's a case for staying invested.
No, see, you have to understand that what category are we representing. We are, if we talk about the market is lacking any energy, the market is sapped of any energy level, so to speak. We're talking about the near term. When I say near term, this is subject to change. This could change next week, this could change next quarter. But what really matters is that if you are committed to a path of wealth creation, then yes, I know from last October, Nifty has not given any returns, the small cap index has not given any return, benchmark indices have been flat, we're getting tossed here and there. But if you will look back and analyze 2022 and early part of 2023, when we're in 2025 or 2026, it will just look like a passing phase. There is enough and more evidence, and that's data, and I'm not even looking at equity diversified schemes here. We are purely looking at index on a 5-year basis, 10-year basis, 15-year basis. You've made money. If you want to make money in the stock markets, the most important skill, and I'm saying it, Buffett has said it in a newsletter, is patience. So folks, be patient. Don't cancel your SIPs. The India story is not over. The returns in the last couple of months have not been very gratifying, but the returns in next coming months and coming years would be gratifying, I can assure you on that. If you are in a SIP investor and if markets are actually not going anywhere, you're actually buying more units. And when markets go higher, those units are the ones which move out. Today are we talking about the COVID sell-off? You're not. That is just like a muscle memory and it's over now. I mean, are we talking about what happened during taper tantrum? Of course not. It is something which has become part of financial history. So this is a passing phase. Each markets they go through a passing phase. Nothing goes in a straight line. And I think this also will pass through. So be patient. Don't cancel your SIPs. Like I always say in Hindi, स्वदेश में मैं बोलता हूँ, जिंदगी में एक चीज़ हमेशा एक तरफा चलती है, and that is उम्र. एज के अलावा एक तरफा कुछ नहीं चलता. Markets will go up and down.
Yeah, absolutely. That's the nature of the beast. The good thing is that the global markets at least are supportive this morning. A lot of interesting takes coming in on FMCG, and Nestle clearly is the top bet for Saurabh Mukherjee of Marcellus Investment Managers. What makes it to the top of his list? Let's hear him out.
Main FMCG play is Nestle, and one of the reasons we've been steadfast holders of Nestle over the last 5 years or so is the reinvestment ratio is very high for an MNC FMCG company. So they reinvest around half of their surplus capital, the other half gets dividended out, and that allows them to grow the business 10-11% volume growth steadily quarter after quarter, when the other FMCGs deliver say 3-4% volume growth. So if we can find consumer companies that are consistently reinvesting surplus capital to grow their growth, we'll be very happy to look at them. Amongst the non-FMCG players than consumer, Asian Paints, as we have said thousands of times, is a celebrated play on that, right? Their $1 billion capex announcement, growing not just the paints business, but even the home decor business, is symptomatic of what makes for a champion franchise in India. Similarly, Pidilite, I think 3,000-4,000 crore capex underway. That's what you need to see, not just a stable franchise, but high ROCEs being reinvested to grow the economy, grow the country, grow the market.
Kunal is ready. Rudramurthy is here. Rudramurthy also ready. Gentlemen, good morning. Thank you for joining us. Kunal? Long, short, sideways.
Yeah, it's still sideways for the indices.
It's been like for 3 months.
Yeah, exactly.
What should one do? You trade long, you lose money. You go short, you lose money. Like they say in technicals that never go short in a dull market and never create long in a boring market.
Correct.
It's a boring and a dull market, which means don't go long, don't go short.
Yeah, from an index perspective, it's a no long, no short, I would not say not a healthy trading margin kind of a market as such, but from a stock specific, there are a lot of opportunities to try and trade, stocks, whether it's a contra buy, whether it's a breakout, whether it's momentum. So there are different strategies which are applicable for the markets. The one good part which I saw in the data yesterday on the Bank Nifty, so we were discussing this in the mid session as well, that the Bank Nifty was showing signs of outperformance. But then there's been a very interesting data point which has been changed for Bank Nifty, and surprisingly it's not too much on the futures side. So there was hardly any change in the futures open interest for Bank Nifty, just I think 4,500 contracts of reduction, which means a marginal kind of short covering which was seen on the Bank Nifty futures. But then the interesting bit was 40,000 call, which was seen as a hub of call writing for the Bank Nifty over the last week. That saw a dramatic change. You saw the 40,000 puts now getting into a writing mode, which means that the new base for the Bank Nifty would be at 40,000 mark for itself. And on the highest strike, 41,000 call is where there has been an incremental amount of selling for the call options on the Bank Nifty, which means that the resistance for Bank Nifty has changed by 1,000 points in just the last two trading sessions, from 40,000 to 41,000. Possibly, this indicates that over the next couple of days, we might see a follow-through up move for Bank Nifty. That's the only positive part in terms of data point which was seen on the index trades yesterday.
Okay. Kunal, but having said that, what does the breach of the 200 DMA on the index signify? And of course, the rebound also after.
No, so what happens is, Aisha, index always follows what happens in stocks, but it's the other way belief that stocks follows the index. But it's so large cap names like Bajaj Finance, SBI, ICICI Bank, Reliance, all these stocks have already broken their 200-day moving averages. And post breaking those 200 DMAs for themselves, there was a period where for at least 2 to 3 weeks further from the break down of the 200-day moving averages, these stocks remain stagnant at 200-day moving average. So if we assume a very similar like-to-like comparison, maybe even for a curtailed duration, we can expect that at least for the next 1 week, the Nifty may just stagnate at this 200 DMA 17,350, 370 odd mark by a margin of maybe 1 to 2% approximately. So I don't see any major trends picking up even over the near term for the indices based on this 200 DMA break.
Okay, but critical to track the Nifty bank, says Kunal. Let's find out what Rudra thinks about that. And Rudra, yesterday we did manage to see the Nifty bank hold its head above the green line quite convincingly with a 1% gain at around the 40,300 levels. What is it that you're mapping out on the Nifty bank index in terms of chart movement?
Yeah, very good morning. First of all, yesterday that clear outperformance was seen in Bank Nifty, and on Bank Nifty futures, we have clearly closed above that resistance level of 40,350, and now that 40,350 has got broken and we have closed above that, I see now support emerging at 40,350. The outperformance in banking stocks should continue, and especially if you look at the charts of PSU banks, starting from Canara Bank, SBI, Bank of Baroda, all these stocks clearly showed that outperformance. In fact, even in my today's buy list, I have many banking stocks only there, and this outperformance has to continue. And from private banks, in fact, HDFC Bank and Kotak Bank looks very, very attractive, risk reward very favorable. I just feel yesterday the move has started and that outperformance has to continue. On Bank Nifty, I'm looking at targets of around 40,850 initially and then eventually 42,000, but one has to keep that 40,350 support now as stop loss and go long on Bank Nifty future. Nifty will also play the catch up today.
All right, let's get individual stock strategies going then. And Kunal, what is it that you're picking out for our viewers this Tuesday morning?
So I'm going with two buy calls, and the focus is more on the mid cap front this time around. So the first one is Bahan HAL, Hindustan Aeronautics. Very interesting chart because the stock, after a steep rally in the first half of the first couple of days of the month of February, went to a phase of consolidation. Now it's making a comeback again, just exactly bouncing off from its 50-day moving average. So that's an interesting chart shaping up. Would suggest a buy 2660, so almost 100 points on the upside. It's a near-term target which I would expect. Stop loss at 25.25. And the second would be a buy on Indian hotels, more of a repetitive call over the last couple of days. Very interesting chart, classic risk reward for Indian hotels, bouncing off from its long-term moving averages and completing a major mean reversion towards that psychological 300 mark. So would maintain that stance for the stock. Targets would revise it on the upside to almost 330, stop loss at 308.
Right, okay. Rudra, what about your individual stock ideas?
I'm picking both from PSU banks, and the tested as outperformance I feel should continue. I have my first buy call on SBI. State Bank of India has shown clear accumulation patterns at around that 520 to 525 zone, and yesterday it was just showing that clear open interest built up even in F&O, stating that long positions are getting built and risk reward is very favorable to go long even at current level. So I'm looking at initial targets of 545 and then 570 to come in SBI. One can take a positional long even in futures, looking at 545 as target with a stop loss of 520. Canara Bank also has made that bottom formation at around 265 270 support area, and it is bouncing very strongly from those region. So I'm looking at initial targets of 287 and then 310 to come on Canara Bank. Keep a stop loss of 272 and take long position. One can definitely look at F&O positional longs both on SBI as well as Canara Bank.
Okay, on that note, we're going to take a very quick break. The news is that it's a flat move for the SGX Nifty so far, and even US equity markets, which began the day very well last evening, they finally gave up their early gains and closed in the green, but quite considerably off from the day's peak. Asia, though, is holding out quite okay. You've got Korea holding up a 1% gain, 0.6% move coming in for Hong Kong, Japan, Australia, the periphery markets, and Shanghai is just about marginally in the green as we speak right now. Quick break, but all the stocks to watch out for this Tuesday morning on the other side.
Welcome back. Just recapping that we had a very healthy handover from the US markets. Asia in the green, but the SGX Nifty completely flattened out this morning. Let's put the spotlight on stocks and news, lots of them today, and start off then with 5-star. As Nuvama has initiated coverage on 5-star business, they've set a target price at 710 rupees, saying that branch expansion, strong underwriting, all of that is going to be key for the company's growth in the long term. Let's understand a little bit more. My colleague Harsh joins in with all the details. Harsh.
Well, yes, Nuvama is bullish on 5-star business. 5-star business largely serving currently the unbanked, and what they are saying is that, and what Nuvama is saying is that 5-star business's model with regard to secured small loans to the unbanked is quite a strong model. They believe that the focused branch expansion and deeper understanding of consumer behavior is what is really the positive for 5-star business. They believe that borrowers which are at the bottom of the pyramid, low income individuals, but despite that, 5-star business has been able to maintain asset quality. Asset quality continues to remain strong and robust. What they're also suggesting is that there's huge untapped potential for such borrowers to lend to for 5-star, and hence there's a longer runway. But of course, there are operational challenges is what they highlight. They believe that branch expansion and stronger underwriting are going to be key going forward for 5-star business. So keep an eye out on those two factors. They have initiated coverage, which is Nuvama has initiated coverage with a target price of 710 rupees a share, solid 35% upside to current market price.
Okay, let's move on. And CG Power and BOB are all set to be added in the MSCI index come today. Let me take it across to Soumit and get in more details of what the rejig is going to entail for stocks.
Well, the changes that were announced earlier for the MSCI Global Standard Index will be effective from 1st of March, which means that the adjustment will happen on February 28. Now, what does this adjustment mean? Largely, it will lead to outflow and inflow of funds from the stocks that have been added to the index and which have been removed from the index. Now, on the addition list, there is CG Power and Bank of Baroda. In case of CG Power, analysts are expecting an inflow of close to $164 million, which is nearly 11 times its 20-day average volume. In case of Bank of Baroda, analysts are expecting an inflow of close to $136 million, which is nearly 2 times its 20-day average volume. Now, on the deletion list, there is only one stock, and that is Biocon, and analysts are expecting an outflow of close to $65 million US dollars, which is nearly 7 times its 20-day average volume. Also, there have been some weight changes in few other stocks, namely Adani Enterprises, HCL Tech, JSPL, Shriram Finance, and ACC. Now, in these stocks, the weightages have come down, and these are expected to lead to an outflow of close to 11 to 102 million US dollars. And in addition list, Reliance Industries, Infosys, HDFC, ICICI Bank, and TCS have seen a slight increase in their weightages, which could lead to an inflow of just 3 to 8 million US dollars. Now, apart from this large cap stocks, nearly 25 stocks have also been added to MSCI Global Small Cap Index, so do keep an eye out for these stocks. And only 4 stocks have been removed from the MSCI Global Standard Index, which is Cartrade, CG Power, Johnson Controls, and Shilpa Medicare.
Thanks very much, Samit, for giving us all those details. Time to move on then and get in some top fundamental stock calls. Dipan Mehta then, he's bullish in the hospitality space. Which are his top bets? Find out.
It's better to buy the hotel companies. I think look at the way Indian Hotels reported, what kind of numbers they have reported, and some of these smaller hotel companies as well. And I would say that that's a better way to play this particular investment theme rather than the aviation sector. The hotel industry, there is anyway a crunch when it comes to capacity. It is not all that easy to increase hotel capacity. It takes at least 3-4 years to build new hotel rooms. So that's the way we'd like to play it. Another company which comes to mind is, of course, Mahindra Holiday, which is a vacation company, and that also has reported decent numbers last few quarters or so, very attractive valuations and a lot of cash on the books as well. So I think that's the way to play these two companies, rather this particular sector per se.
Well, big exclusive. It's a terrific Tuesday. Medanta, and we've got a glimpse of, we've showed you a glimpse of what Navika Kumar's interview of with KP Singh. So it's a packed Tuesday for our viewers. But I just want to go to the headlines which we just captured for you. What really is catching my attention is that the IMD today will be coming out with the first forecast on whether they see there is an El Nino or not. Why this time around the summer, why this time around the winter of 2023 has already become summer of 2023, and are we in for a very hard summer? If you're in for a very hard summer, the near-term trade would be air conditioners, refrigerators, foreign beverages. That space could automatically see some action depending on what we hear from IMD later in the evening today. Chakri Lokpriya, good morning. Thank you for joining us. It's a market which is giving everybody a reason to get worried about, because whatever you're buying, you're not making money. Why is this market behaving in such an erratic manner?
Good morning. I think there are a few factors. One, post Adani's episode, there was a certain amount of fear on the banking, which is largely now, if you look at the valuations of banking, they've all corrected significantly. Second, there was this fear that, and that fear is, the second fear is more real, which is with the US now indicating that they will continue to raise interest rates, which means RBI will be forced to raise interest rates along, even if it's in a smaller step, which means the cost of doing business for any company, especially those with higher working capital limits, will go up. So that will have an impact on slowing down the economy and slowing down consumer spending. And third is, I think a combination of these two is the profit margins of all these companies have come down. And new capex is unlikely by private sector because they're still sitting at only 75% capacity. So there's no reason to do new capex. So I think a combination of all these three factors have led. Then of course the catalyst was the initial corporate governance issue, or rather potential corporate governance issue.
So how are you keeping yourself busy in this kind of a market then? I mean, if you trade, you lose money. If you invest, your NAV goes down. Are you sitting on cash? Are you raising more cash?
It has been a difficult market. We have raised more cash. We're sitting at about probably 7% cash. And so what we've done is basically lowered down some of the cyclical sectors, global sectors, that is metals. We're now with the correction in banking, I think it's largely done, and not largely done, at least the valuations are looking more attractive practice of buying into some of the both the PSU and the private banks. Consumer, as you mentioned, for instance, companies like Voltus have corrected fairly significantly in the past. And now, with a hot summer, with valuations on their side, and also the company trying to take back market share in some segments like the rack rather. So I think it's time to look at companies like that.
Mapping some of the other names which actually held out well in yesterday's session, and actually banks were the ones which led the recovery, be it an ICICI Bank which held out by nearly about 2%, SBI, BOB did very well, and so did Can Bank. But Kunal, that off late banks have been beaten down. Yesterday yes, you saw a recovery, but how much would you really read into that? And could this be a building up trend now from here?
This could be a big trend for Bank Nifty, at least big by the sense, at least a 1,000-point move is what we can expect on the Bank Nifty. And the sense of the data is what I was, mentioning at the start of the show as well, that till Friday, there was huge amount of writing at the 40,000 call option. Now, that generally indicates that traders were almost like confident that the Bank Nifty may not surpass about the 40,000 mark yesterday. And yesterday the data changed, completely, I would say 180 degrees for the Bank Nifty, where from call writing, the 40,000 strike start to become a hub of put writing. And now, not just by a margin of 1:1, but it's more than 1:1.5 for the Bank Nifty on the 40,000 call, which means, for example, the 40,000 call has around 1,43,000 contracts as open interest, and the 41,000 call has 1 lakh open interest. So that itself tells you that the degree of confidence which came by yesterday on the option segment indicates that this could be a turn of events for Bank Nifty, and we may expect another follow-through up move for the Bank Nifty in the next couple of days. But at max, I think 41,000 is what we can best expect on the upside for the Bank Nifty.
All right, meantime, just let's check in on the broader market movers in yesterday's trading session. And here are some of the stocks that really bore the brunt of the selling pressure. Uflex, for instance, was down in double digits. You had something like an Emphasis as well that was down and out about 7%. Z Entertainment, relentless selling pressure, so another 6% as the stock is now languishing around the 183 mark. BEML along with the JK Lakshmi Cement were some of the other casualties in trade. Let's get in a view. Rudra, what's the outlook on a Z Entertainment, and have you had a look at the charts of a Mahindra CIE down 7% yesterday?
See, first of all, for me, Z has broken a crucial support of around 205 to 200 zones, and now the stock is having so much of news around it. It is just as volatile as a Bitcoin, moving in circuits and an F&O stock. Again, if you see data points from exchange, it was just told yesterday like it will be removed and then again added back, NCLT, so much of news flow, and I don't know how one can trade, but I can just tell you these are stocks to definitely avoid. Crucial support at 200, 205 area has got broken now. So again, this stock might take some support now at around 160, 170 zone, but I will surely avoid trading Z on the long side. And even if you have to short, you want to have those comfort of shorting it around 200, 205 zones, not at current level. Definitely a stock to avoid. And when it comes to Mahindra CIE, if I have to look at that stock again, similar chart patterns, but then yesterday, if you see this Mahindra CIE move, whatever correction it has just given to me, for me, that looks as a buying opportunity. 410 has been that breakout zone, and stock is now giving that correction to those levels of 410. So keeping a very tight stop loss of 380, I will look at buying Mahindra CIE and look at targets of around 480 to 500. 380 should be the stop loss.
Okay, those are some interesting stock ideas coming your way, but how is it that you build a township? Not just a portfolio is what we're talking about, and what does it take to build a township? DLF's chairman, KP Singh, spoke with Times Network's Navika Kumar. Here's a slice of that interaction.
Every part of my life I enjoyed, except the last one, where I was involved in building this township in Gurgaon. It's one of the most difficult things to make a township. It's not, to you guys it looked very simple, but it was a very difficult process how to build a township. So that was the difficult part.
That was the difficult part, and the controversies surrounding it, did that make it even more difficult?
No, there is never a, please understand, I don't think you folks, the most difficult part, first, if I may say, there has never been a private sector township of this magnitude built ever after independence in India, of private sector, not once, this magnitude like Gurgaon. And they will never be in future also for a reason. Reason is this: the most difficult part in township is how do you acquire, how do you purchase land? Because land is in the ownership of feudal families.
All right, let's get a move on then and tell you some of the stocks to keep on your radar. And here are the stocks on the editor's radar that we're closely tracking today. Let's begin then with Bank of India. It's on the brokerage radar in today's trading session as Morgan Stanley has maintained its overweight rating. They've got a target price at 125. Now, the stock has been down 24% in the last 2 months, but Morgan Stanley believes that the risk reward does look attractive and it is well placed.
Morgan Stanley talking about a PSU bank, and look at the report. We believe the share price will rise relative to the industry in the next 60 days, which means that they expect that Bank of India will do very well. And we estimate there is a 80% or higher probability for the scenario.
Nikunj, I think there's a bit of an issue with your mic, so we will just get that fixed maybe. But yeah, pretty interesting to see Morgan Stanley coming out with a lot of conviction there on a PSU bank. I'll tell you what, we'll just hear out what Sandeep Sabharwal has to say on Voltas and come right back.
Voltas is actually down 30% over the last 1 year. So that reflects, I think, some confused thinking in the management in the past. But I think now they are getting things in hand. See, the core unitary cooling business has no issue. It's just that the market was bad, they did badly. They are the market leaders, and if last 2 years sales have been bad, the probability that this summer sales will be good is very high. So I think to that extent out there, they should do well. But what I saw in the result release was that they have won big orders in the electromechanical projects business, where the order book has moved up sharply to around 7,500 crores from 5,400 crores. So I think that's a positive, and if that comes in with improved margins, it could help the company turn around. So the stock is down a lot, and if because of these results, etc., if it cools off further, I would be interested in actually buying the stock. So I'm looking at it from a perspective of looking to buy rather than turning negative now when the stock has fallen so much, although we don't own it at this point of time.
All right, let's get right back to it then and talk about the stocks on the editor's radar. Nikunj, we were discussing Morgan Stanley's note on Bank of India.
No, Awan, what is intriguing for me is that it's a tactical call. When Morgan Stanley is coming out with a tactical call, they feel that in the short term, this stock rather could do something different. Morgan Stanley feels that Bank of India is going to outperform relative to the industry next 60 days. And they see a 80% high probability scenario for this. Now, why are they making this kind of a case? Either they feel the stock has bottomed out and is looking very cheap, or they feel that there is going to be some kind of a large inflow which is going to which could come back into some of the PSU banks, and especially Bank of India. So rather than getting into the specifics of Bank of India here, this report in a sense caught our attention, especially because of the kind of communication they've had. We expect the stock to go higher, and there's 80% probability that this will play out. This is more like a tactical trading idea from Morgan Stanley. We should take notice of it because Morgan Stanley feels that there is 80% chance that the stock will go higher.
Okay, that's a tactical call then from Morgan Stanley on Bank of India. But why is Wipro on our radar? And that's largely on the back of the kind of rejig that the company is taking. What would it mean, Nikunj, in terms of now the company closely looking at each of its verticals and shuffling the heads?
Unfortunately, Wipro is not, in last couple of quarters have been washed out for Wipro, both in terms of margins and in terms of industry growth and also the stock performance. There was this COVID rejig where there was a change of guard at Wipro, and Wipro in a sense was able to cement back a lot of their, abstract pieces. they're trying to reboot and reorganize the entire business structure. But I think this would be work in progress, because with Wipro, what we've seen is that we've not seen predictability, we've seen volatility. While what they're talking about in terms of focus on cloud, which is the right thing, enterprise technology, one of the core, consulting is great news. So what Wipro is trying to do is that they understand that the kind of size they have, the brand they have, but somehow they've got a very disjointed kind of a rhythm between the entire business, so to speak. They're trying to bring it back. But this time around, markets will not get excited, because markets will, I think, wait for evidence of the strategy to pan out, because the strategy of realignment in the past, 2021 and 22, has not really worked in favor of them. So good news. I'm glad they're talking about it, because the stock has been beaten down. But I think it'll be 2-3 quarters before markets would say that whatever Wipro is attempting here, whether it would be fruitful or whether this would be dismissed again.
Okay, so we'll have to wait for the strategy to actually pan out before the street will be convinced of Wipro. Let's move right on then and find out, Aisha, what it is that our chartists as well as our fundamental guests are picking out for the day.
Oh, absolutely. Chakri, let's just pick up on that point in IT. I mean, the MS note on Wipro aside, but would you feel that it's all not okay for the IT pack, even though these stocks have shown a fair amount of rebound from the lows, and maybe to some degree the bad news is already in the price?
I think bad news is in the price, because even in the face of a US slowdown, recession, etc., still, companies in the US will spend to increase productivity, which means increase IT services spend. And there seems to be no sign of slowing down in that, except maybe one or two usual suspects like financial services and retail. So which means that, companies growing their top line in IT services, Indian IT companies, whether it's Infosys, TCS, not Wipro, HCL Technologies, all of these companies are growing between 13 to 15% top line. And if they're growing the bottom line also around the same 15% and trading at, between 25 times to 14 times, depending on the company, which means the earnings are intact, the valuations are on their side, and your order book is fairly clear. So which means I think the sector will outperform the overall index, and the sector itself will be able to deliver absolute returns.
Okay. Rudamurthy, where are PSU banks headed? Do you think they've corrected enough, and yesterday's bounce in some of the PSU banks should be regarded as an indication of strength?
Yeah, definitely, Nikunj. In fact, even on my today's buy list, I had both PSU banks. And yesterday, right from the market open, we had that clear outperformance, one from banks, and especially PSU banks were outperforming even the private banks. If you just exclude Kotak Bank yesterday, PSU banks have largely outperformed private bank. And no doubt Kotak Bank as well as ICICI Bank are also doing very good. But if I have to specifically talk on charts of SBI, this stock is definitely taking support at around that 510 to 515 zone, and clear signs of accumulations are visible. And for me, SBI is definitely headed towards levels closer to 555, and even if it can break that 555 zone, stock can move towards levels closer to 590 and even 600. So for me, SBI offers a great risk reward at current price to buy. And also, if you look at chart patterns of Canara Bank, Bank of Baroda, they're all looking very, very good. Canara Bank, in fact, has that support at around 270 zone. Repeatedly, stock is bouncing from those areas. Valuation wise also, I see a lot of comfort in Canara Bank. These are stocks to go positionally long, available in F&O. Great risk reward to buy at current level, and one can definitely make money in even Canara Bank. So my top two picks will be first SBI and then Canara Bank. One can even look at Bank of Baroda. One is its inclusion news in MSCI, which is also giving that move, and support levels at around 157 is very strong in Bank of Baroda. So for me, again, Bank of Baroda offers great risk reward at current market price. So I am not bullish, but very bullish. And one has to be stock specific or at least sector specific now, because at index level markets are boring. So great buy opportunity in all the three PSU bank. In the order, I will prefer SBI first, then Canara Bank, and third Bank of Baroda.
Chakri, where do you stand when it comes to the PSUs? Because as per the RBI data, there's been robust demand and healthy financials for some of these PSBs across the board. We also just saw Morgan Stanley's latest note on Bank of India.
We have been buying all the PSU banks in the latest fall and adding to our position simply because, I think there are two or three fears. One was the Adani fear. Second is an election year, whether there will be farm loan write-offs and therefore PSU banks will be affected. And third is whether, if the economy slows down, then the loan growth will come down and bad loans will increase. So these are the three fears. I think if we take all these fears into account, assume they are real, and a Bank of India, Canara Bank, PNB, etc., they're all trading at about half a time book, 0.6 times book, adjusted book values. So we even let's assume they do not go back to one-time book value, but go to something like 0.8 times book value. That's a good 35-40% upside from more than that from the current level. So I think it's more positional investments, which we clear
To rise gradually to $100 per barrel once again by the month of December. That's the word coming in from Goldman Sachs. Let me take it across to Samit and find out why they're saying this. Samit, why this rebound all the way back to 100?
Well, Goldman Sachs is saying that the China demand is expected to boom in the coming months, and a flattish non-OPEC supply will push the market in the deficit side again from June onwards, and this will lead to OPEC announcing a reversal of its production cut that they had announced earlier, and this reversal is expected to happen from June, a meeting that is slated. Now, they're saying, however, there are three risks to this decision of a reversal that they're expecting, and firstly is the fact that OPEC leader had emphasized earlier in October that the production cuts would continue to remain throughout the 2023, and second, they are saying that current crude prices continue to remain lower than the reversal of the production cut that they're expecting might not happen in June, and third, they are saying that OPEC historically has responded cautiously to the domestic demand pulls coming out of China, and if there is a reversal in the production from June, then they're saying that the oil prices would gradually rise to $100 per barrel by December, and they're expecting the prices to remain around the $100 per barrel mark in 2024 as well. But this is assuming that OPEC will increase the production by around 1 billion barrels per day in the second half of calendar year 2023. However, if the three risks that I just mentioned plays out and OPEC production remains flattish, then they're expecting that Brent crude or crude oil prices could trend around $107 per barrel as compared to the current levels of $82 per barrel. So that's a big upside that Goldman Sachs is expecting in crude prices in the second half of calendar year 2023.
Okay. Well, oil prices go higher. While winter is behind us, why should oil prices go higher? Well, you never know with these things. As we walk into trade this morning, SGX is indicating that we are in for a muted start. There was a mild recovery in some of the banking stocks yesterday, but the breadth of the market, in a sense, has not been very strong. Chakri, what do you make of the news from Bajaj Auto? They're feeling the heat of the slowdown in the world. It could be demonetization impact in Nigeria or other markets contracting. Bajaj Auto yesterday has indicated that they would be cutting production.
Indeed, and as far as their export markets are concerned. But if you look at whether it's Bajaj Auto or even TVS Motors, these are the two existing auto manufacturers who have kind of succeeded in the EV space. Any other companies there are new companies like Ola, etc., trying to do whatever they're doing. But these companies, Bajaj Auto and TVS Motors, have existing distribution networks, have the entire value chain, the system supply chain in place, and EV is a new product. So I think that will support Bajaj Auto's valuation overall. Yes, there will be a near-term cut because of some of their export weakness in some of their markets. But I think overall, I think the valuations is on Bajaj Auto's side, and it'll do well.
Chakri, we had a chance of meeting the CEO of Zomato. And the sense, at least I've come back with, is that they've got cash and they're very profit conscious. In the light of what has happened in the startup world, where all founders are now profit conscious, do you think one should hold on to a stock like Zomato or Policybazaar or Paytm? Is the worst behind them?
All these stocks that you mentioned are all down, like, a good 50, 60, 70%. So which means if they're going to conserve cash, which they're simply telling us that they will grow far slower than projected out earlier. So if they're going to grow slower, which means then whatever accretion of cash flows, etc., into the future are also going to slow down, delaying the road to profitability further out. So it's one of those catch-22 situations. So if they are going to conserve cash, then you should start valuing them as a regular cash generating companies, which these companies are not. So I think long story short here, I would still stay away from these new age consumer technology.
Okay, still stay away. That's the word coming in on some of these new age tech companies. Wipro is going to be definitely that stock to look out for. They're going to be restructuring the business into 4 global business lines with effect from April 1st. And of course, after that, Morgan Stanley downgrade as well coming in on that stock. BOB as well, that's going to be included in the MSCI India Standard Index from today, while Biocon makes an exclusion. So look out for that stock as well. Z, considering the NSE has now withdrawn the earlier order, and the May F&O contracts are going to be available from today itself. So Z is another stock which is going to be in focus. That's of course the this year price action on Z. It's obviously fallen, but let's just bring up yesterday's move on Z and show you how it panned out. Vodafone Idea, they've allotted debentures worth about 1,200 crore rupees to ATC Telecom Infra. That's going to be another stock to look out for. And then ICICI Lombard, some of the newspapers seem to be reporting that the government is actually planning mandatory third-party insurance cover for vehicles. So that's going to be sentiment positive for ICICI Lombard for sure. There's also Cipla in focus this morning. The US FDA observations have been released and they've failed to review discrepancy. So that's another stock. And then Rain Industries as well, not the best of quarterly numbers this time around. They've seen a margin decline, revenue and EBITDA though has been higher on a sequential basis. So these are a couple of stocks which are going to be in focus. Kunal Pharmaceuticals, the days the markets have cracked, one has seen some amount of defensive buying. Cipla, Sun Pharma were the resilient ones through last year. What is the trend that you foresee now? You think what pharma did last year could be healthcare, hospital stocks this year?
Yeah, healthcare hospital stocks, they've done reasonably well. I think if I can probably club even the IT stocks, of course, in the defensive pack, then these stocks have done reasonably well in the last 4-5 months for themselves. But surprisingly, pharma stocks have just gone into a disarray as such, because large cap names like Sun Pharma, Cipla in fact has corrected more than 10-12% from the last 3-month highs. Sun Pharma also, I think the stock has been a lot more stagnant at this 900 to 1000 mark, broadly over the last many months. So that's a stock which traders generally look out for in terms of the leadership quality, but somehow the stock has gone into a consolidation. And the other names, the likes of Dr. Reddy, DV Stab, even these stocks are at a problem of their own. So it's a very difficult call to try and expect that these pharma stocks would get into any kind of a major recovery or rally. You have to bet on very individual kind of names over here. So for example, Oro Pharma, I think last 10-15 days stock had shown very good pickup of price action. Glenmark Pharma has been a very good outperformer. Lupin, surprisingly, the stock has managed to hold on to its previous year lows of 600 odd levels for itself. So there are few stocks which are emerging as candidates of potential reversal. But then when I look at it broadly in terms of the large cap names, the traditional large cap stocks and the trends for these large cap names, there are no major trends which are emerging, which could probably expect that the pharma stocks are getting into any kind of an immediate revival. So possibly it's a stock specific situation which is arising on the pharma index.
All right, stock specific when it comes to the pharma index. What about Chakri, your outlook when it comes to the FMCG players? We have seen a number of price hikes. There is that inflation concern as well looming large. Will you be very selective when it comes to this consumption basket?
Yeah, I think, in terms of FMCG, still largely staying away because all these stocks are expensive. And if there is going to be a drought or El Nino, then, the FMCG stocks are hurt. So I think, a good summer, we'll stick with Varun Beverages, expensive stock, but done executing phenomenally well. So I think Varun Beverages will continue to do well as we go into summer.